For decades, China was synonymous with outsized growth, offering investors and companies a new market to penetrate. But as fears of a worsening China slowdown weigh heavily on industrial and commodity-based companies, retailers look at China differently, and growth is still a large part of that view.
China could ebb and flow, and there are different considerations with GDP growth in China, the housing market, and different economic considerations. But as far as retail goes, in terms of luxury goods and global brands, it's a very important market for the long term. So retailers can't really ignore this market and need to continue to invest in it and also build their awareness and their brand and their identity globally.
On a conference call, Bernard Arnault, CEO of luxury conglomerate LVMH, acknowledged the economic slowdown in China, but also said, quote, many observers underestimate the fundamentals of China's economy, noting household consumption is on the rise there. Like other retailers, the luxury goods seller looks to the country as a long-term growth driver. PVH Corp just announced it will buy the remaining interest in its Tommy Hilfiger joint venture in China. CEO Manny Chirico says China is the fastest growing market for Calvin Klein and Tommy Hilfiger. Michael Kors and Coach just reported double-digit comparable store sales growth in China, while noting weakness in Hong Kong and Macau. Retail experts with an eye on China say the higher-end consumers' penchant to spend may be leveling off, as evidenced by weakness in travel to Hong Kong and Macau. But spending in mainland China remains healthy, which is where retailers are concentrating their investments in the country.
We've been seeing somewhat of a global pause in Chinese traveling, so that's something we watch out for at names like Tiffany, Richemont, and higher-end names.
But mid-tier retailer H&M says it is, quote, very happy with business in China, even in a tougher environment. H&M and Victoria's Secret parent company L Brands plan to add stores in China this year. However, retailers that don't operate in China, like Macy's, are seeing a drag from China's economic slowdown. Fewer Chinese tourists are traveling to the U.S., which means less spending at its flagship stores in big cities. And China has proven lately to be unpredictable. So if the slowdown leads Chinese consumers to pull back their spending, it could be trouble for retail. For Nightly Business Report, I'm Courtney Reagan.